All right, guys, it's Angelo Christian with another great edition of Real Estate Insider. And today we're following through with our kickoff with a jumbo reverse mortgage. It's a big topic that I've been talking about lately because I'm so passionate about the reverse mortgage. I want to talk to you guys about today. It's a different product that we're going to be rolling out. It's actually the jumbo reverse mortgage. So it doesn't matter where you're at in the country. If you're a senior citizen, you should be considering whether you're looking to purchase or refinance a reverse mortgage. It's an awesome product. It's endorsed by the AARP. It's backed by the federal government. We actually write one for jumbo loans up to $10 million, okay? The loan amount can go up to $4 million. It's good for properties up to about a $10 million purchase. It has huge benefits, and I want to talk to you guys about it today. I've helped a ton of seniors with converting their current mortgage into a reverse mortgage, and I want to talk to you about some of the benefits of why you should consider it if you're looking to purchase, whether you're looking to upsize, whether you're looking to downsize. There's a lot of opportunities, and reverse mortgage is very powerful. In fact, before I came up here and we're shooting this, I was actually helping a senior client here in Houston with a reverse mortgage, and it, you know, with their situation, it resonates with me so powerfully because, you know, they're retired, and now that they're retired, 25% of their income is being used towards medical, and they don't have the money to pay for their mortgage anymore. All right. He was 71 years old. His income has declined, and they're on the verge of, you know, getting delinquent on their house payment. And the reverse mortgage will come in and step in and actually pay off that house and pay off the mortgage and get rid of their house payments. You know, it was a very, stressful situation. The husband just had a stroke, and he's 71 and she's 61, right? And they're afraid they're going to lose their house. They're knee up in debt, and they don't know what they're going to do. And they can't qualify for a refinance because their credit is shot because they're behind on the mortgage payment. They owe their creditors, and a reverse mortgage is a great solution, a great idea to help somebody to pay off their house so they can stay in the home, keep the house, and own the house and live in the house for the rest of their life, and they don't ever have to make another house payment. And that's a really powerful thing about a reverse mortgage. Now it's available also for jumbo loans. It's never been available for jumbo loans before. So if you're, let's say, for example, a lot of the clients that I've helped with a reverse mortgage in California, in San Diego, Calabasas, in Florida, and Boca, and the Keys. If you own a house out there and you're trying to figure out what you want to do with your future and your retirement planning, a reverse mortgage is a good option to consider. It's not for everybody, and we're going to talk about some of the pros and some of the cons, but you should at least be aware of what a reverse mortgage is, so that way you can make the best decision. So I want to talk about, first off, obviously the requirements of a reverse mortgage. So if you haven't heard of a reverse mortgage before, you need to find out exactly what it is. And also I encourage you to talk with your financial planner, your financial advisor, and they can also educate you about it more. Or you can just watch some of the videos that we produce. There's a lot of great information online. And like I said, the AARP actually backs and endorses the reverse mortgage, and you can also get more information from them. But basically, a reverse mortgage, the way that it works is instead of like a forward mortgage when you actually make the monthly payment every single month, a reverse mortgage, there is no monthly mortgage payment. So you actually don't make a house payment. And it allows you to live in the home and retain title and ownership of the property. But instead of reducing your mortgage balance every single month like a regular conventional loan, with a reverse mortgage, there is no payment, so it has negative amortization. So let's say that you bought a $5 million home, for example, in Miami, right? And you put 20% down, you financed $4 million. If you were to make a house payment on that, your house payment, for example, would be $20,000 a month. But on a reverse mortgage, there is no house payment. So every single month, when you start off at $4 million, and month one, it goes to $4,020,000. And month two, it goes to $4,040,000. So it's negatively amortizing, so the balance is increasing. However, you get to live in the house, and you don't have to make any mortgage payment. You have no obligation to the lender, to the creditor, and you retain title to the property. And there's no penalty or restriction, so you can sell the home or refinance at any time. All right? But you get to live in the home. You don't have to make that monthly payment every single month. Now, you do have to maintain your property taxes and your insurance, but you do not have to make the house payment. And that's one of the really good things I like about a reverse mortgage compared to a conventional loan. If you had a $4 million mortgage, you have to make that $20,000 house payment every single month, right? Regardless of your situation, regardless of what happens in the future, regardless of what happens to your health, regardless of what happens to the economy. And I'm using $5 million as a purchase price here as an example. It could be $2 million, it could be $1 million, but this is for a jumbo loan, so it's going to be for bigger properties, and the benefit really goes up to about $10 million. If you have a house over $10 million, a reverse mortgage isn't really going to work for you here because the benefits aren't going to be there. You can still do one. If you have a $20 million house, call me. I can help you with it. But really, after over $10 million, there's not really the equity benefits. And so the other thing is you do have to be either a U.S. citizen or a permanent resident to qualify for this loan program. So if you're on a visa or you're transferring from another country, non-permanent, that won't work. And you do have to be 62 years or older to qualify for a reverse mortgage. So you can't be 60 or 61. You have to be 62 or older. Okay. You can use it for purchasing properties. You can use it for refinancing, and you can use it in the United States. All right. And the other thing is that there's different requirements for properties. So you can use this for single family homes, townhomes, condominiums, or multi-unit up to 4 unit. Okay. But you cannot use it for commercial properties. You cannot use it for farms, co-ops, mixed use, things like that. Now, the one thing on the condominiums, that if the condominium is $500,000 or less, then it has to be an FHA approved condominium. If it's $500,000 or more, then we just require something called a spot approval, where we actually and we don't require it on the whole association. We'll just do a approval on your particular condominium, and it does not have to be FHA approved if it's over $500,000. And actually, one of the clients that I'm going to show you here that I've helped in Boca Raton, she actually had she had a condo, and we did a reverse mortgage on her condo. It was $1 million condo, and it did not need to be FHA approved. We just did a spot approval just on her condo, not on the whole association. So it was really cool. We really helped her out a lot. It was awesome. So the other thing is that if your property is worth more than $1.5 million or higher, we do have to get 2 appraisals. So we'll have to order 2 appraisals on the property, and they'll determine the valuation of the property based on the lower of the 2 appraisals. So keep that in mind. If the home is worth $1.5 million or more, we have to do 2 appraisals. Okay. The other thing is that with a jumbo reverse mortgage, it's a fixed rate option only. So there's not an adjustable rate option. It's only a fixed rate option. All right. And the one thing I do want to make you aware of, if you're married to your spouse and she is below 62 years old, the difference between a jumbo reverse mortgage and a regular reverse mortgage, like a HECM FHA mortgage, is that the non-borrowing spouse, if they're below 62, they do not have the title rights exemption. So that means that, for example, if one of the spouses is 71 and one of the other spouses is 61, and we do the closing and just do it on the spouse that's 71 and he passes away, well, the heir to the property will be his wife, but she's 61. She doesn't qualify to have a reverse mortgage right now. So at the time of passing, she's given 1 year to either sell the home or to refinance it and get a mortgage in her name. She has 1 year. She doesn't have to make any payments for a year, but she has 1 year to do that. Now, if she turns 62, then she can qualify for a reverse mortgage. But the difference is with a FHA reverse mortgage is that if the spouse is below 62, she's protected on title and does not have to sell the house or refinance or do a reverse mortgage in the future. So I want to make sure it's very clear that you understand that, because there is a difference there with a jumbo reverse mortgage and a FHA HECM reverse mortgage. And that's the difference on the vesting for title if you have a spouse that's below 62 years old. Now, if we, in this example, when the spouse does turn 62, we can refinance and add her to the loan later. Okay, it's to protect her as well if she wants to stay in the house. So that's a good thing. You know, obviously, if you want to refinance and add your wife or your husband and they just turned 62, we can add them to the reverse mortgage by doing a reverse mortgage refinance and add them to the loan. So That's a very important thing. The other thing is that the closing costs are included in the loan. There is origination fees. There is no monthly mortgage insurance, which is good, guys, because it's not an FHA. There is no monthly mortgage insurance on a jumbo reverse. There is a $30 servicing fee every single month. The closing costs are financed into the loan. Usually closing costs are about 3 to 4% of your total settlement, and those will get financed in. The only thing you'd pay out of pocket for generally is your appraisal fee, and those will typically run about $500 to $700 for an appraisal. We do have to get counseling. Counseling is a requirement. It's usually done. It doesn't have to be a FHA, a HUD-approved counselor, but we do have to get counseling done, and you can either do that in person or you can do that over the phone. We have many counselors that can help you with getting your counseling done. But basically, those are some of the big requirements for a jumbo reverse mortgage. The other thing we do, which is required, a financial assessment. So you have to understand that our company, our bank, is making the loan. So this is a manually reviewed loan that we're making, and we're going to do a financial assessment, and it's based off of the VA residual income assessment, because we want to make sure that after your bills are paid, that you have enough money to pay for your property taxes and your insurance. So if you guys have ever heard the VA residual income calculation, what we do is we take your gross income minus the debts on your credit report, minus your property taxes and insurance, and then depending on what region of the country you live in and how many people in your home, you have to have a residual income left over every single month. And it's generally around $500 to $1,000 left over, meaning that you take your gross income minus your obligations, and what you have left over should be $500 to $1,000 a month. If you do, then you're cool. If you don't have that, you're still cool. But we have to set aside something called LISA, which is your life expectancy set aside for your property taxes and your insurance. In other words, we have to, let's say that I'll give you an example. One of my clients that was in Calabasas, California, he had a $2 million home and he owed $250,000. So he qualified to get $1 million in cash. So in his example, he didn't qualify for the residual income test. So what we had to do was set aside a LISA account for his property taxes and insurance. So it's an escrow account where we pay his property taxes and insurance every single year. So out of that $1 million, we took out, a certain percentage to pay his property taxes and insurance, because the thing is, we want to make sure that they're paid, because if they're not, then the county can foreclose on the house. Or if there's not insurance on the house, if the house catches on fire, then you're screwed, right? So we got to make sure that their property taxes are paid and that the insurance is paid. So we're going to manage that account if you don't have enough residual income to pay for your property taxes and your insurance. So that's a really, really important thing, as well as one of the requirements for a jumbo reverse mortgage. The other thing is that there's a few different options. There's many different options that we offer with the jumbo. You can do a lump sum where you take out all the cash, like my client did. He took out $1 million in cash. You can also do annuitized payments where we write checks every single month to you. And in his case, he could have got a check for $10,000 a month for the rest of his life. That's a pretty good deal, So you can also do the annuitized payment. All right. The credit line growth rate is not an option with a jumbo reverse mortgage like it is with a HECM FHA reverse mortgage, where you can actually your account value will grow with the appreciation of your real estate. That is not an option with the jumbo reverse mortgage. But again, you can do the fixed rate lump sum, or you can do the annuitized payment. So these are options that you can consider depending on what your goals are with your life. It all depends on where you're at. Some people want all the cash. Some people, they just want to get a check every single month. They want mailbox money. Either way, we can look at both options and see which one's going to be better for you, based on what you're trying to do. A lot of people I talk to, they're at this stage of their life, they're wanting to vacation. They're wanting to travel around the world. Get rid of all their debt, maybe help their children. What have you. So we'll assess that whenever we have the call to see what's going to make the most sense. Because in the end, it's all about you. It's not about me. It's not about the loan. It's about what's best for you. So the other thing I do want to mention that is a difference with the jumbo reverse, is that it does require a credit score. Like a regular FHA reverse mortgage, there is no credit score requirement. Doesn't matter if you have a 400 credit score, you're delinquent on your mortgage, you got 800 credit score, doesn't matter. With a jumbo reverse mortgage, you have to have a 600 or higher credit score to qualify. Okay? And even if you don't, we can help you to get your score up higher, but you do have to have a 600 or higher credit score. The other thing is that if you are delinquent on your property taxes or your mortgage prior to application, the underwriter is going to want to know why you were delinquent. Why are you behind on your taxes? Or if you don't have insurance on your house right now, they're going to want a letter of explanation why you don't have insurance or why you've been delinquent on your taxes. So those are things that we have to find out. You want to make sure before you apply that you're at least current on your mortgage. It doesn't mean you'll get disqualified, but they want to check to make sure that you actually that you're current on the mortgage and that you paid your property taxes, you paid your insurance. Those are some of the big things that I think that are very important with a reverse mortgage. And again, why are we talking about this? Because it's an instrument that you can use if you are a senior as an option to consider to help to benefit your life. Okay, this is a huge financial investment, whether you're trying to buy a house or you're trying to refinance. And the best thing I think that can help you to strategically make the best choices is to have options, right? So you have options you can exercise to see what is it that you want to do. And if you don't even know what a reverse mortgage is, then how would you even know? A lot of people make choices, they're not even aware of everything that's out there in the marketplace. So the whole purpose of sending this video out into the world is to make people aware of what the choices are, what the options are. And with a reverse mortgage, it's a great instrument that can educate you and help you financially. Imagine that you're in retirement, your income has probably gone down, and you don't want to make a house payment anymore. That's the conversation I had with my client today is, hey, you know what? Why do you want to even make the house payment anymore? What are you going to do with this house when you leave? Well, we're just going to let it go. None of my kids are going to take over the house. They're not going to pay the payment. So the thing is that if that's true, wouldn't it be great if you could live in this house for the rest of your life and you never had to make another home payment again? Well, that's possible. So that's possible with a reverse mortgage. You can never do that with a regular bank loan. You have to keep making that payment every single month, no matter what happens to you, no matter what happens to the economy. With a reverse mortgage, it's a non-recourse loan. So it doesn't matter what happens to you in the future. You're never responsible for it legally. The lender can never sue you or come after you because there's no recourse to you as the homeowner. If you want to get up and walk away, you can get up and walk away and no one can ever come after you. Try and do that with a bank loan, you'll get sued and you'll get a judgment put on your credit if you walk away from that obligation. So that's one reason why I really like a reverse mortgage compared to a regular loan if I'm in my retirement years, because I don't want to have to deal with the house payment and I can live in my house. I still have title to the property. So if I say, you know what, now I want to sell, I'm selling. And all the profit on the house goes to me. So it's a good deal. I mean, there's no tricks, there's no scams, there's no gimmicks. It's just understanding how the loan works. And that's the biggest thing where there's misconceptions about the loan is that the government's going to take my house. The lender's going to take my house. It doesn't work like it. No one's going to come and take your house. It's understanding how the loan works. And if you understand it, then you can utilize it towards your advantage. And in this case, it makes a lot of sense. To me, it makes a lot of financial sense. And the fact that it's a fixed rate. And the rates range anywhere from 4 to 6%. And hey, you know what? If you want to make the house payment, you can make the house payment. No one's going to stop you if you would decide you want to write a check that month. But again, my logic is, why would you? If you had $1 million home, the house payment's probably about $5,000 a month. Do you want to give that money to the lender? I wouldn't. If I didn't have to, and that's my thinking on that. And so, and let me tell you how a reverse mortgage, how I've helped a lot of people with it. A lot of people, when they're in retirement, they're going to either upsize or downsize. Most of them do downsize. Okay. Or they already own a house. So in this example, I'm going to show you 2 examples here of people that I helped, that really helped them tremendously. My first client here, Don Hyde, and he's actually in San Diego, California. You can check him out right here. He was 82 years old whenever we closed, and he allowed us to share all his information. But he was 82 years old whenever we closed on his reverse mortgage, and his home was worth about $2.2 million, and he owed about $190,000 at that time. This is back in 2013. And anyway, he's 82, and his goals are he wants to travel the world. He owns 3 investment properties. He's doing pretty good, but he has all this equity in the property. He wants to stay in the house. He doesn't want to sell the house. The house is gorgeous. You see a picture of the house. The house is beautiful. It's in San Diego. So he wants to keep the house, but he's got $2 million in equity, and he's trying to figure out what's the best thing. He could do a refinance and pull out the cash, but if he pulls out $1 million in cash, he's got to pay a payment of $5,000 a month, and he's 82 years old. Who wants to pay $5,000 a month? You're 82 years old. You don't want to do that. So you can. It's an option. But then the other option that we gave him was a reverse mortgage. And we're able to give him $1 million in cash. So we paid off his current mortgage to Chase. And then he got $1 million in cash on top of that. And no house payments. Doesn't have to make any house payments. We're going to pay his property taxes and his insurance for him too for the rest of his life. Okay? He gets to live in the house. We write him a check for $1 million. We pay his property taxes. We pay his insurance, pay off his current mortgage, and he can do whatever he wants with the money. He can sell the house whenever he wants. He's not tied in. He's not locked in. He just has to make sure that we're paying the property taxes and insurance. That's it. So it really is, in that example, it allowed him to give him the money to do the things he wanted. He wanted to buy rental properties, right? And pay cash for them, and he wanted to travel the world. So he was able to accomplish both of his goals and still live in his house. He didn't have to give up his house to do it. So that was a great situation where we helped somebody tremendously with a jumbo reverse mortgage. And then my other client here that you're going to see, Bonnie Tyler, she actually is in Boca, and this is what I was telling you about earlier. She had about a $900,000 condo in Boca, and she was a little bit younger, and she owed like $360 on the condo. Now, a regular HECM mortgage wouldn't have worked here because of the exceeding the loan limits, and she didn't get as much benefit. But on a jumbo reverse mortgage, she was able to pay off her mortgage. She had about $90,000 in credit card and installment debt. So we paid off her mortgage, and then we also paid off all of her debt. And she's living in her house. She's happy. I just talked to her like a month ago, and no house payments, And her house, since we closed, has gone up like $300,000 in value since she actually closed on her house. So, which is really cool. So, but in her situation, she paid off all her debt. She got rid of her house payment, and she's not making any house payment. She's happy. Now, if she wanted to sell her house and capture that equity, because Boca's real hot right now, she could sell her house and take the profit off the sale of the home and cash out, because there's no prepayment penalty, there's no balloon, there's no restrictions. That's what's so cool about a reverse mortgage, and that she's able to live in her home and keep her house and not have to make that monthly payment. I talk to people all the time where, you're going in life, but then something happens, right? You can't control everything. I can't control everything. If someone's health goes down and they're committed to a mortgage payment, the lender doesn't care. If you call them and say, well, I got sick and I got cancer, can you just forgive my mortgage? They're going to say, screw you. Pay that payment. It's due on the 1st. And I'm not saying it because I'm a lender. I'm saying that's how it is. That's how these banks are. If you don't make the payment, they will foreclose on your house. Okay? With a reverse mortgage, there is no house payment. So you have to understand that we can't control the future. And so if you have an obligation, you have to meet that obligation. But at least with a reverse mortgage, that obligation has been lifted, and you have an option where you can make the payment if you want to, or you don't have to make the payment. You can sell the house if you want to, or you can keep the house and live there for the rest of your life. Now let's talk about real quick what happens if you were to live in the house and you pass away, because that's where I think a lot of the questions come about. What happens at that time? So again, the loan is a non-recourse loan. That means there's no legal liability against you or the heirs at the time of passing. Let's say that I have a house and I pass away and I have a reverse mortgage, right? The house goes to my son. My son is given 1 year without any payment obligation to liquidate the property. He can sell it, or if he wants to keep the house in the family, he can refinance the loan into his name. Now, if he decides to sell, he just has to pay off the bank's loan. And then after the bank's loan is paid off, any profit will go to my son. Okay? So that's how it works. If the son says, no, I don't want to deal with it, you just sign it off to the lender. No one ever comes after the son. No one goes after any of the heirs. The lender will sell the house. And if they sell it at a loss, they sell it at a loss and they write off on their books. If they sell it at a profit, they keep the profit. But that's exactly how the loan works. Okay? And it's in writing, it's in black and white. There's no ambiguity, there's no misgivings. That's how the loan is structured. Okay? So it's very, very important that you understand that. Now, if you have on a jumbo reverse, like I mentioned earlier, if your spouse is below 62 years old, in that same scenario, the house would go to them. They could either refi it into their name or sell the property. If they're 62 or over, they can apply for the reverse mortgage to keep the property. But on an FHA reverse mortgage, it's different. If they're below 62, they get to stay in the house regardless. Okay? So there's a huge, I want to make sure that you guys understand that's a huge difference, that on an FHA reverse mortgage, the loan has to, on an FHA reverse mortgage, the property is usually max out at about, 1.5, 1.2. This wouldn't really work for a big jumbo property. But if the spouse is below, 62, they can just stay in the house. They're cool. They don't have to worry about refinancing or doing anything like that. But on a jumbo, they're going to have to do something within a year. Okay? So just want to make sure that, and this is if the spouse is below 62. If they're over 62, they're on the loan with you and you're cool. So, but anyway, that's how it works at the time of passing. So guys, if you're out there, hey, listen, if you're a realtor or a financial planner and you're talking to your clients about considering a reverse mortgage, give me a call. My name's Angelo Christian. I've been doing this for 15 years. I've done about $1 billion in lending nationwide. I've helped about 13,000 people with their financial situation, buying a house, refinancing, investing in real estate. What we do here, we are a nationwide residential and international commercial lender. So if we can help you with buying an apartment complex, buying a restaurant, refinancing your home, using a VA loan to buy a property, buy a retail strip center, we do everything, pretty much under the sun. When it comes to lending, that's securitized lending. We don't do unsecuritized loans, but we do mortgage lending. And so we'd love to help you, or at least talk to you in any way that we can to help you with your financial goals. And again, we're very happy that you guys are following us on all of our social media. It really means a lot to us. Please leave any comments down below in the chat box. Share this with all your friends and family. If they're looking to get more information about reverse mortgages or refinancing or buying a house, we'd love to talk to you about it. You can call me at 832-431-6331. You can also click on the link below to apply to get started if you want to talk about a reverse mortgage. Or if you're in the Houston area, come by my office. We can talk about a reverse mortgage with you. We do 3 great shows with our YouTube channel, Real Estate Insider, Learning Hub, and Influencers. So please, again, share this with all your friends and family. We're really trying to grow and build our following. All this information is free. We come out here to empower you, to educate you, so you're aware of how real estate finance works. It's crazy. It blows my mind that there's not more people that are doing this to teach people and educate them on how mortgages work, how reverse mortgages, buying a house, all these things. It's a very confusing process to a lot of people. And so we at least want to shed some light on there. So then that way you're aware of the type of loan that you're getting, because banks don't give all this information out to people. Okay. Believe me, they don't. For some reason, it's kind of like tight-knit and it's secretive on how loans work and how they're structured. So we want to make sure that you guys are at least aware of how loans work so you can make the best decision. Thank you so much for checking us out. Again, I'm Angelo Christian. Call me if you need any help, 832-431-6331. Take care. Peace out. Bye-bye.